MBA Research and Curriculum Center and NOCTI have collaborated on this microcredential. This microcredential deals with internal controls used in accounting to meet organizational needs and consists of 4 targeted skills. This targeted skill explains internal controls for accounting systems. In accounting, internal controls meet organizational needs by protecting a business's finances. The purpose of internal controls is to prevent fraud, isolate errors, and ensure compliance with regulations and laws. Internal controls consist of both preventative and detective measures. Preventative measures are designed to keep mistakes or fraud from happening. Detective measures are similar procedures used to trace errors or discover fraud after they have occurred. A main preventative measure in accounting is separation of duties. Responsibility is divided so that no one person oversees the lifespan of a single financial transaction. Multiple people are responsible for each transaction. A single transaction has 3 activities. 1. Handling assets, such as cash, checks, or inventory. 2. Authorizing use of assets. And 3. Keeping records of assets. These activities are separated among accounting staff to be sure that one person does not control everything. To prevent fraud, the employee who handles the incoming cash should not be the same one who deposits the money in the bank. The person who orders assets should not be recording the transaction in the records. This practice ensures several sets of eyes on each transaction, which is sometimes called a monitoring control. On the other hand, an employee who handles cash during operating hours and prepares the deposit slip at the end of the day has the opportunity to steal cash and lower the amount on the deposit slip. Separation of accounting duties can be more difficult in a smaller business, which means duties may be assigned to various departments outside of accounting. The separation of duties should be clear to a third-party auditor who will examine the records. A second preventative measure in accounting is access control and authorization. This involves protecting financial assets and sensitive information from unauthorized access. When not in use, file cabinets should be locked, and computers password protected, and files and information should not be taken off-site. Also, any employee who separates from a company must lose access to business facilities and data. A third preventative measure in accounting is proper documentation or recording of information. Standard forms are used to produce financial reports and statements that are compliant with laws and regulations. Record maintenance is important in case hard evidence is needed to back up a claim. Areas where accurate documentation is needed include revenue, receipts, purchasing, payables, disbursements, payroll, and end-of-month and financial reporting. When a discrepancy is noted, detective measures will include who gave authorization, who had access to the system, and examine all documentation such as account balances and records. To recap, there are 3 main preventative accounting measures to take when running a business. They are separation of duties, access control, and documentation. Each has a role in helping a business to survive with proper records.